you're going to see changes in, the way those buildings are constructed because of robotics for sure.
Yeah, charging stations and everything that
Seeing that
people are
now.
thinking about that right now and
Well, they're
doing
constructing
it right now.
it. Yeah,
Correct.
absolutely.
Yeah. And so those are all things that, in 5-10 years from now will become standard.
That's right.
That not everybody is doing right now.
That's right.
Welcome to our Industrial Advisors podcast. You have Bill Condon and Matt McGregor here again today. Today's topic is going to be the Puget Sound big box market. And
Which means?
We'll define that as a starting point. So I consider big box in today's environment to be 300,000 square feet and above.
Times have changed.
Times have changed. So let's talk about that. So when we got into the business, 20 years ago, a big deal at that time was 100,000 square feet, right? And so
300 was
off the chart.
Enormous.
We rarely heard of. I remember hearing about like a 400 in my second year in the business, and I was like blown away. So I think like when we start, 20 years ago, 100,000 square foot deal was a big deal, right? And,
yes.
And so now I would say today, like our big box market, I would define as kind of 300 and above. And then, from a location standpoint, it's changed over the years, right? I mean, Kent used to be where when we started, most of those 100,000 foot big deals got done. It's pushed further and further south. It then turned into Sumner. Deals got bigger. And 200 and 300s were getting done in Sumner. And then it got bigger and bigger, it pushed into Frederickson, Tacoma, and South. And that's where you start to see some of the 500,000 square footers and above get done. But why don't you talk a little bit about, so locations change, sizes change on the big box market, like how functionality has changed for those buildings over the years?
Well, obviously the functionality of Clear Height's gotten a lot bigger. So when we got in, the big boxes were being built, call it 1 to 400 was kind of the range, but those 400s were being multi-tenant.
Yeah, divisible.
Yeah. They were 30 foot clear. So the big boxes were. So I would say the dramatic changes is Clear Height, 36, 40 now. And then truck courts and trailer parking have been the big change, right?
Yeah.
They're not liking the shared 200s anymore.
No.
Right? And they're wanting trailers on site, mostly for, obviously you get into the larger deals and they're absolutely a must. So the buildings that you see suffer are from that past generation that were jam sites, 32 foot clear, no trailer storage, and a truck court that was shared 200, or maybe it's 130 alone. They're hurting, right?
Yeah.
For sure. So the modern building, I would say, is cross-loaded, 36 to 40 foot clear. The slabs are typically a lot more stout now than they used to be because of slab problems historically, right?
Yeah.
And trailer, storage probably on the perfect design buildings straight across from the docks.
Yeah, it's so funny because when, years ago, like no one used the extra yard. Like sometimes they would be built and nobody used it. And it was like, well, that's just kind of a waste. And now it's like you get into that 300 and above and you almost have to have it.
Yeah, and I think the reason for that, there's been a lot of studies on why.
Mm-hmm.
I read one, I think Hamid said it a few years ago that I was like, I think that nails it. And it was something to the degree of the reason why those yard components changed is the ships got bigger and there were a lot less drops. So when you have that freight coming in, they're putting a lot more freight on the market at once in less frequent amount of times, right?
Yeah.
So if you're leaving I don't know what the price is today, but when I read the study, it would say $250 a day to leave your container in the port. You're not going to leave that container in the port.
Right.
And so the deals got bigger, the buildings got bigger because the ships got bigger. And then the yard component got bigger because it's less frequency of the ships. So they were dumped all at once. So they wanted to drag it out of the port and go throw it in their own yard before they could process it into the warehouse.
Yeah.
So the buildings got bigger and the yards needed.
Yep.
That was the combination.
Yeah.
But yeah, you had mentioned the migration of it is interesting because when you and I first started, Sumner was just being really developed.
Yeah.
And then for 10 years, it was the number one absorption market. And I remember telling tenants, you can get a great deal. I mean, you might as well be talking about Portland.
Yeah.
Right. And now seeing it progress and obviously understanding all markets do that. Now Frederickson being the number one absorption market. And through COVID, we were seeing deals get done. They're doing a spec all the way down to Kelso now, right?
Yeah.
And so that's going to come back into play. But obviously demand has softened, so you're going to see the spigot turn off, say, south of Lakewood.
Yeah. The secondary market development will hit pause, whereas if you're in the kind of core market, you'll keep going. So let's talk a little bit about the state, because we get asked all the time, like, what's going on in your market from a bigger box, large tenant standpoint.
Yes.
So let's talk about that. So we ran an analysis and kind of current state of buildings that are existing, that are available over 300,000 square feet, and then what's under construction. I'm going to start with the market availabilities of existing product above 300,000 feet. There's 10 of them, and I'm not going to go through every one of them, but there's 10 of them ranging from South Seattle kind of through DuPont and Frederickson. And you have the 700 two-story building, in the Trammell Crow deal in South Seattle, which is a very big building for that submarket. And then as you go south, on the south end, you have DuPont that's got, 500,000 footer roughly. And then the stuff in Frederickson, and then Tacoma and Milton kind of in between.
Got to throw Kelso in there.
Yeah.
1.1 million.
I mean, so from an existing standpoint, 10 options above 300,000 square feet. 2 of those are subleases. One's at 500,000 footer in Sumner, and one's at 350 in Kent. So of the existing buildings that are up, there's about 10 options above 300,000 square feet.
And in those 10 options, I would say you've got 3, potentially 4 tenants in the market in that upper size range of those.
Yeah.
That doesn't sound terrible, but I would say that's a dramatic change from where we were at over the last several years, where most of those buildings, it was more of a 2-to-1 ratio. You had 1 existing and 1 under construction and 1 or 2 tenants in the market, right?
Yeah.
At that time, and it was just always churning through those tenants. So I would say the percentage of that demand is down a bit, and so some of these are going to be a little bit long on lease up time.
Yeah. So you have those 10 existing, and let's talk about what's under construction.
Yes.
So 7 buildings are under construction that can accommodate tenants, above 300,000 square feet. So 17 total when you look at availability today, what's available, and then another 7 that are currently under construction.
And most tenants in that size range, so you'd say 17 buildings total.
Yeah.
All of those will deliver this year. So if a tenant is in the market today, they're looking at all 17.
Absolutely they are.
Right.
Yeah, absolutely.
So that's a lot of options for 3 to 4 tenants in the market, no doubt about it, collectively.
Yes,
Yeah.
and you have, and all those 7 buildings that are going to be built because of how new they're going to be. We talk about functionality. Some of the 10 that are existing it's older products. So
That's right.
There has definitely been a flight to quality.
Of those,
yeah, there's a flight to quality with those bigger tenants, generally speaking. So the newer, more functional product's going to get leased faster than the existing.
And then location comes into play, right?
Yes.
Because I think as much as, and we've talked probably on 3 or 4 podcasts about our like of the Seattle Trammell Crow multi-decker building.
Yeah.
But that building, you could almost say, stands on its own, right? As does Kelso for a different reason, right? So the core buildings are going to get typically a lot more looks that are in between those ports of Seattle and Tacoma.
Yeah.
In the Sumner market, I would even say Sumner, Frederickson market on up to Kent. In that primary area is where the most tenants are looking, okay? And then as you go south, you're going to get discounted. And as you go north up into Seattle, that's a different tenant.
It is. I mean, you kind of hit it. Functionality combined with labor availability oftentimes drives that decision for a tenant.
That's right.
And those markets you just alluded to, Frederickson, Sumner, proven markets, good labor, great buildings. So those, generally speaking, have done the best from a new product delivery standpoint.
That's right. And I do think, taking all politics out of this, we don't get political on this, but I do think some of the manufacturing things are going to be coming home. And so you're going to start to see an uptick on some of those larger deals, especially in maybe light to heavy manufacturing.
Yeah, the manufacturing, I mean, yeah, as we know over the years, it's heavily weighted to distribution from a tenant standpoint.
92% in Seattle.
Yeah. So, but that manufacturing percentage, well, it's not going to jump, significantly. It's going to jump.
I think out of those 17 buildings, you're going to see 2 to 3 manufacturer deals that we would not have seen prior.
Yeah, agreed.
Yeah.
Yeah. So that'll be an interesting one to look for and watch on the big box marketplace.
Absolutely.
So we've talked somewhat about what the existing market looks like today, right? And where the demand is. So the tenant demand's okay.
Yep.
It's not great, but it's okay.
It's okay to light.
Yeah. And so some of those buildings will get taken down. So we'll keep a close eye on it, obviously.
But I would also say this time of year, I'm not one of those guys that always say, oh, it's, going to warm up, but I will say, yeah, exactly. I will say, I feel like the market's picking up momentum, and that 3 to 4, because we don't know if one of them's real. We know 3 deals are real. One's questionable.
Yeah.
Okay. So say 3 to 4 deals north of 300.
Mm-hmm.
I would say, if we were talking in June, we'd be talking about 6 or 7. Yeah.
Yeah. So we've seen the big box market develop from a functionality standpoint, and it'll be interesting to keep an eye on like what that looks like and how that changes over the next 10 years. You think about like charging station, for like trucks
going 85 feet.
Yeah, I mean, clear height will, the clear height will continue to probably get higher.
Yes.
Eventually, and yard space, along with that. But then like electric
robotics,
trucks,
you're going to see changes in, the way those buildings are constructed because of robotics for sure.
Yeah. Charging stations and everything that people
now
are thinking about that right now and
they're
doing
constructing
it right now.
Yeah,
correct.
absolutely.
Yeah. And so those are all things that, in 5-10 years from now will become standard.
That's right.
That not everybody is doing right now.
That's right.
So if you were building a building in today's environment, number one, you could pick your submarket to build it in, pick your submarket, the size, and then what you're doing from a extras standpoint.
Well, you know what I'm going to say, because it's been my whole career. It's in Sumner.
Yep.
Okay. I truly feel this has nothing to do with the fact that we have a listing there. It honestly doesn't. I truly feel when you look at the port system and where the labor is, Sumner is still the number 1 market.
Yes.
Okay. It was absorbing 38% of the market's absorption for a decade until it ran out of space. So if I could build the perfect building, it would definitely be in Sumner because of the 2-port system. And I would build, are you saying today?
Yeah.
Yeah. Well, I'd be building what we're building.
Yeah.
Right? I would be. And so it's got the right trailer storage. It's the 2 right sizes buildings, right? It's in the right location. It's got the right clear height. They're built for EV, right? So that's going to be a challenge, by the way, because as you know, we're running out of power.
Yeah.
And you can't just go to the municipality and say, hey, likely in the future, a tenant's going to need a fleet of trucks. So we need another, 5,000 amps or more just sitting there. They're going to say, no, we'll bring that power in when you show me the tenant.
You have to show that you're going to use it.
And that's an issue, right? Because that's not cheap. So do you build that infrastructure and not have the power there, right? The answer is probably yeah.
Yeah, we're building 2 great buildings down there, a 500, a 700 that's expandable. And I agree that those are fantastic sizes. You can demise them if you need to.
Great job on design, KG.
Yeah, that is great. It's a great project. So we'll keep an eye on all of that. But we did want to do this to just talk about kind of the current state of where the big box market has been, what's developed to, and then what the current state of the big box market is. And it'll be a really interesting 2025 to keep pace with it all and see how it all develops.
My only prediction will be that you'll have a slowdown of announcements in 2026. Because I think even if you say, hey, you're going to have double the amount of tenants in 6 months, you're going to have 17 options starting to deliver, standing and delivered, right?
Yes.
And not enough to tenants to fill all of them. So I think it's going to be a flight to location, right?
Yep.
A flight to quality and the right design. And you're going to have some buildings without tenants for a while, which is going to probably slow down that, you're not going to build into that competitive fray. You're going to see a little slowdown.
Absolutely. And nationally, these developers are in multiple markets, and some of them are just already starting to, hit pause in some of these markets because they have bigger buildings that are sitting right now. So until the market in general heats up, some of that stuff gets absorbed, then some of this stuff could get paused. But we are going to see that newer product and more functional product lease first for sure.
Absolutely.
Thank you very much.
Thank you.
That's the big box market, current state of the big box market report.